Good afternoon, good morning, good evening to you, and welcome to the Investor Agenda event at COP26. I'd like to welcome all the speakers that I have here today and the attendees joining us live. Today we'll be focusing on how we can accelerate actions for a net zero economy. My name is Rebecca Mikula-Wright and I'm the CEO of the Asia Investor Group on Climate Change and the Investor Group on Climate Change Australia-New Zealand. The Investor Agenda is a common leadership agenda on the climate crisis that is unifying, comprehensive and focused on accelerating investor action for a net zero emissions economy. The Investor Agenda draws on expertise from across the investor landscape to set out clearly joint expectations in the four interlocking areas: policy advocacy, corporate engagement, investment and disclosure. With that, I'd like to introduce and hand over to Stephanie Pfeiffer, CEO of the Institutional Investor Group on Climate Change in Europe.
Many thanks, Rebecca, and hello everyone. I'm delighted to be here with you today. IIGCC is the European membership body for investor collaboration on climate change, and we are one of the founding network partners behind the Investor Agenda. Now, investors have a critical role to play in driving the transition to a net zero economy and helping to really avoid the otherwise devastating impacts of the climate crisis. We are really pleased to have seen significant momentum ahead of this COP in the commitments and actions that investors are taking to rise to the climate challenge. You'll have seen that a record number of asset owners and managers have already announced net zero commitments as part of initiatives such as the Paris-aligned Asset Owners Group, the Net Zero Asset Owners Alliance, Net Zero Asset Managers Initiative, and we actually have more than half of the world's assets under management committed to achieving net zero by 2050 or sooner. Now, to support this momentum, the network partners responsible for the Investor Agenda have called on investors to produce comprehensive investor climate action plans and have developed clear guidance on the practical steps that investors can take to set climate goals and deliver on those. These steps include allocating capital to businesses that will succeed in a net zero future, engaging with companies to encourage them to set net zero targets, aligning their business strategies with the Paris Agreement, advocating for policies that support the achievement of the Paris Agreement, and being really transparent on their own actions. So during this session today, we will hear from investors based in the US, in Australia, Japan, Brazil, and the UK, who will share their ambitions to increase their contributions towards tackling the climate crisis. And they will share details of the actions that they are taking in all of these areas. Now, if investors are going to achieve their own net zero targets and really drive change in the real economy, they need to be operating in a supportive policy environment. And I'm really pleased to be sharing with you, therefore, that just ahead of COP26, the network partners responsible for the Investor Agenda published the Global Investor Statement to Governments on Climate Change for 2021. This was supported by a record 733 investors representing over $52 trillion in assets, so almost half of all assets managed globally. It's the largest ever group of institutional investors to sign on to such a statement, urging governments globally to step up to tackle climate change. The statement highlights the level of investor appetite to unlock the trillions of dollars of investment needed to provide solutions to the climate crisis and the significant demand for changes in policy that would allow this to happen. Asks within the statement include 2030 targets aligned with limiting temperature rise to 1.5 degrees Celsius, net zero transition plans for each carbon-intensive sector with a timetable for decarbonizing those actions, phasing out fossil fuel subsidies and coal power by set deadlines, and mandatory disclosures aligned with TCFD recommendations. So ambitious government policy has a vital role to play in delivering the vision of the Paris Agreement and to provide the framework to accelerate and amplify the actions of investors and companies. There are many challenges ahead as we seek to play our role in driving change in this critical decade of action. It won't be easy, but it is essential that investors continue to leverage their collective power and help accelerate the transition towards net zero emissions. So I really look forward to hearing our panelists' remarks today. And with that, back to you, Rebecca.
Thank you so much, Stephanie, and really excited to hear from the panellists we have here today. So to moderate our session and our speakers today, I'm joined by Fiona Reynolds, CEO of the PRI, and the panel of investors include, we have some obviously here in person, and also we're delighted to have California State Controller Betty Yee, who is the board member of CalSTRS, and Ceres, joining us virtually today. We have Deanne Stewart, CEO of Aware Super in Australia. We have Fabio Alperowitch, co-founder of Fama Investimentos. We have Faith Ward here with us today, the Chief Responsible Investment Officer for Brunel Pension Partnership. And we have Hidenao Makiuchi, Managing Director, Dai-Ichi Life International Europe. So with that, Fiona, I'll hand over to you to take us through the panel.
Thanks, Rebecca. So we do have a truly hybrid mixed group here, and hopefully everything works perfectly. So as we've just heard, over half of the global assets under management, so some 52 trillion in assets under management, have supported the global investor statement to governments on the climate crisis, calling for more ambitious actions and policies that provide the signals and the incentives to direct global capital flows towards net zero. There's also been a huge upsurge in the net zero commitments over the past year. Specifically, half of the world's institutional assets have now made commitments to net zero, and we really do hope that there will be many more of those commitments to follow. But as we also know, it's one thing to make a commitment, and it's a completely another thing to be able to implement it and to make it happen. So the investor agenda's investor climate action plans, expectations ladder and guidance provides investors with clear expectations for issuing and for implementing comprehensive climate action plans, including steps that investors can take to support the goal of a net zero emissions economy by 2050 or sooner. And there's been action plans from institutional investors such as CalSTRS and Allianz and other leading investors, really that demonstrates that high ambition climate action requires planning. It needs to be underpinned by strong governance and accountability mechanisms, and we need to operationalise an organisation's climate strategy in a way that makes it something that can be implemented, that can be that organisations can be also held accountable for their commitments that they've made. We need to be transparent, and we do need to be holding the industry to account as well. Furthermore, climate action is most effective when appropriate links are created across areas including target setting, corporate engagement and policy advocacy. Decarbonising the economy is not easy. It hasn't done before, and working collectively is extremely important. That's why groups like the Investor Agenda are important, bringing people together to be able to learn from each other and leverage off each other's work. As the momentum grows for investors to align their portfolios with the climate goals laid out under the Paris Agreement, our aim today is really to highlight investor climate action plans in both the long and the near term, and what reaching net zero globally will take from government policies and investors. So without further ado, I'm going to go to our first speaker, who's joining us via video from Australia. So our first speaker, our first member of our panel is Deanne Stewart, and Deanne is the CEO of Aware Super. So the question to Deanne was that as one of Australia's largest super funds, Aware Super has made the commitment to transition its investment portfolio to carbon neutrality by 2050. Aware Super are also one of the 700 signatories of this year's Global Investor Statement. So our question to Deanne was, what are some of the actions that you've taken towards this goal? And in Australia, how have you engaged with the government on strengthening climate ambition and climate actions towards establishing a sustainable financial market? So now we'll hear from Deanne.
Well, Thank you very much. And it's wonderful to join you, even if it is in a pre-recorded fashion. So excuse that. It is 2 a.m. here in Sydney, so I'm very happy to do it during the day, but really wish that I could be there, because this is certainly, climate change is near and dear to the heart of Aware Super. Just to tell you a little bit about Aware Super, it is one of the largest funds here in Australia. We have over 1 million members, and a lot of our members are public sector and essential workers, and they really get climate change. They are at the forefront of seeing it, whether it be the health, whether it be protecting the community, or whether it be indeed providing the essential services. So climate change is a critical risk to our portfolio. And from a pension fund perspective, as one of the largest pension funds, if you think about it, the way we need to invest is to make sure we're looking after the retirement savings of those retiring tomorrow, but also some of our new members that are looking to retire in the 2070s. And so having a really sustainable, thoughtful way about really looking at investment risk is critical. And at the heart of that is climate change. So what have we done? There's been several things that we've done. Certainly way back in 2015, we had the Climate Change Adaptation Plan, where we continued to look at how we would begin to protect our portfolio. But over the last year, at the beginning of 2020, we released our next version, the Climate Change Transition Plan. And what we've done there is set really clear and really ambitious targets and a very clear plan. So to give you a sense of what's in that plan, first of all, net zero by 2050, but importantly, nearer term action. So by 2030, looking to reduce carbon emissions in our entire investment portfolio by 45 to 50%, in line with the Paris Agreement. And then in the even shorter term, in the next 3 years, looking to actually reduce carbon emissions in our listed equity portfolio by 30%. So that's the action plan. What have we done? In this period of time, since we launched it just over a year ago, we have reduced carbon emissions in our listed equity portfolio by over 45%. We've divested from thermal coal, and we've invested more than $1 billion in renewables and climate change technology. So really taking some clear action, because we think that both protects our members, but also takes advantage of the huge opportunities that some of these changes will bring. So that's what we've certainly done. We've also, as part of being signing the Global Investor Statement, or what we're all signing up to, also released our Destination Net Zero report that is equivalent to our TCFD, really outlining our transition plan, our targets, and how we're going. And we will continue to present that each year to our members. So there's some of the actions that we've taken and the ambition that we've set. But your question was also, how are we engaging with government? And what I'd say is it's not just government. We're certainly engaging with federal government, but also importantly here in Australia with state governments, with the regulator, with corporates and with other investors, to make sure that we're able to really have maximum impact on behalf of our members and their future. So in terms of that, we're both doing that as an individual pension fund, but also collective, some of the collective movements here in Australia. So let me just tell you a couple of those things. So certainly from an individual perspective, engaging with the regulator, for example. So the regulator has just come out with a climate change financial risk and what they're wanting of financial service firms. And so we've been heavily involved in that and participated and provided submissions to the regulator on that and what we think financial services firms more broadly should be doing to really take into account climate change and climate change risk. Secondly, we've worked really closely with the state governments that have been very ambitious on the climate change. So to give you a sense, we're here in New South Wales. The New South Wales government has not only announced a net zero for 2050, but also reducing carbon emissions by 50% by 2030. We've participated with them on what is the policy and the framework setting to really help global investors like Aware Super and those of you listening on the call to actually participate in really making us a renewable economy. Australia is full of solar and wind, plenty of sun, plenty of wind, and plenty of capital. And so there's such an opportunity here with the state governments. So that's some of the things that we've done individually. From a more collective basis, We've also been one of the founders of what's called Climate League 2030. And this is getting a broad base, both investors here in Australia, but also the business community to really sign up to far more ambitious targets by 2030. It's the near-term action that really matters at this point to make any difference. And so from that perspective, with that Climate League, what we're looking to do is take out 230 million tonnes by 2030 here in Australia in terms of what companies and organisations emit. So that's one of the things, as well as more globally involved with the UN Global Investors for Sustainable Development Alliance, with the UN Secretary General, commenced with 30 other major global pension investors and corporates, and really look to commit to several elements of that, both in terms of metrics and in terms of plans. So they're just some of the things that we've looked to do. And signing the Global Investment Statement is yet another thing where we want to be part of this global capital movement that really does make sure that governments do pay attention to the importance of climate change and climate change resistance, and not just set targets, but clear action and clear policy frameworks to enable the capital to do what it can do.
So thanks, Deanne. So the short term matters, not just the long term, and we need to be using all the levers, dealing with governments, dealing with regulators, dealing with corporates, dealing with other investors, and working collectively. So we're going to move from Australia now and head over to the United States, and with us here is Betty Yee. So Betty, Special Presidential Envoy of Climate John Kerry said before the Leaders' Summit on Climate in April that I encourage every financial institution to lay out a climate action plan with specific targets year on year to align your investments with net zero. So given the role that you have, you're on the board of both CalPERS and CalSTRS, and you're the California State Controller. Can you share with us your perspectives on how investors and regulators can really support each other in delivering what needs to be ambitious and credible climate action plans?
Of course. Thank you, Fiona. It's a pleasure to join my fellow panelists today. And good afternoon, good evening, and good morning. Recently, New York State Comptroller Tom DiNapoli and I penned an op-ed on this very subject. We are encouraged by the Biden administration's whole of government approach to climate change, which includes initiatives to protect our national economy from the impacts and shocks of climate change. This includes action by the United States Securities and Exchange Commission to mandate corporations disclose risks that they face from climate change. And so when we look at addressing a systemic risk like climate change, this is so vital to efficient securities markets. And the private sector, we're seeing, is increasingly aware of the urgent need for climate risk disclosure. So we're seeing just really kind of this convergence of interests here that really, with investors and regulators working together, can really bring much needed progress. For example, a 2019 survey of 215 of the world's 500 largest companies found nearly $1 trillion in reported climate-related financial risk. And SASB, the Sustainability Accounting Standards Board's research shows that investors consider the nature of the risks faced by companies to be so significant that they've identified climate change as being material for 72 out of the 79 industry sectors. And part of the letter issued in early June, coordinated by the sustainability nonprofit Ceres, we call on the SEC to require all corporations to disclose their climate risks on at least an annual basis. And if corporations disclose their risks on an annual basis, this is something that's already publicly supported by many, many corporations, including Apple, HP, Uber, Salesforce, 15 state treasurers and investors representing over $41 trillion in assets. And what investors really need are material climate disclosures to make informed investment decisions. And for too long, our securities rules have led to incomplete and incomparable climate information, which is insufficient for protecting investors' assets. We believe the SEC should adopt climate disclosure rules and metrics that are based on the recommendations of the TCFD, which has been endorsed by thousands of global companies and investors. And these disclosures should be industry specific, that provide insights into the company's climate risk exposure, their strategies for addressing it, scenario planning, and include scopes 1, 2, and 3 emissions, which are needed to assess the full range of climate risks facing companies. Moreover, we believe the SEC should update their disclosure rules regularly on climate impacts as the scientific consensus around them evolve over time. And so this critical relationship between investors and regulators, Fiona, is you're seeing this really globally as such an important relationship in terms of all of us making progress.
Thanks, Betty. So I'm going to move from the US to Asia and move to Hido. And so over the past few months, we've seen increasing global ambition and commitment towards net zero by financial institutions. And we heard Deanne talk about what Aware Super was doing. You're on the steering group of the Glasgow Financial Alliance for Net Zero, or GFANZ, as I like to say. We need some more acronyms in the investment space. And I'm so glad that we keep creating them. And Dai-Ichi Life was the first Asian-based member of the UN-convened Net Zero Asset Owner Alliance. So what does it mean for Asian financial institutions to participate in global alliances to get to net zero?
Yeah, thank you, Fiona, for the question. First of all, thank you for giving me this precious opportunity to speak as a panel in this special event. I am Hidenao Makiuchi. I'm the head of our Dai-Ichi Life UK office. And also, as Fiona mentioned, I'm the member of a steering group of GFANZ. So today, I'm talking from the perspective of Dai-Ichi Life and also the Global Alliance. To answer the question, let me briefly touch upon what Alliance is about. There are, as some of them mentioned, several major global alliances for asset owners, asset managers, and banks, amongst others. These are obviously global coalition of financial institutions who made a pledge to net zero. These alliances broadly require members to commit to set emission reduction target after a certain period of joining. And GFANZ is acting as a kind of an umbrella of these subsector alliances. And in the last week, in the financial day of COP26, GFANZ was very much highlighted. And it seems obvious that GFANZ is now playing a leading role in global financial sector toward net zero. And in the past 1 or 2 years, the top-down initiatives of making net zero commitment and target setting has gained a huge momentum. This trend came first from government level, where they are required to set NDCs, and then next, this trend came to financial sectors, especially in Europe, and where major financial institutions target setting seems to be almost complete in Europe. And now, this trend is spreading from Europe to the rest of the world. So there is no doubt that this trend will come too soon to Asia. So Asia is a very important place because about half of the emission is coming from Asia. So why would you wait until the trend will really comes and get passively involved in that wave? Rather, we should proactively move forward and make the trend from Asia. In addition, there are huge benefits of joining alliances. You can make your target setting more transparent and credible, as you will use the standardized target setting protocols. And you can also utilize the resources and guidance which have been prepared for the sake of the member. But in the end, joining alliances is about acting together with your fellow members around the globe and change the world together toward net zero. Yeah, I'll stop here.
Thanks. Well, I think that's some really important points, because there is no one investor, no one company, no one government who is going to be able to solve this to get this at all. And I think one of the benefits of GFANZ is bringing together the different actors within the finance sector to work together as well. And it's already having a difference. So we're going to come back to the UK now, where we are for COP. And Faith, as I was saying earlier, no one said it was going to be easy to decarbonise the economy. And Brunel's really been working on the development of tools to help investors take those next steps on tackling climate change. For example, you've been involved in developing IIGCC's net zero investment framework. But in your view, what are some of the challenges that investors actually face in practice when developing and making comprehensive climate action plans that do integrate policy engagement and stewardship along with disclosure?
Thank you, Fiona. And I think you asked me to be sort of trying to summarise this in 2 minutes, which is quite a challenge because there are lots of challenges. And as you say, if anybody that thinks it's going to be straightforward is, that's so not the case, and it is difficult. So I think the first sort of feedback for any sort of asset owners or asset managers listening is like, don't panic. We're all in this together. This is very complicated, and it is through working together through the investor agenda about sort of collaborating to take action. And this is a joint endeavour. I think the net zero investor framework and indeed the investor climate action plans were designed because people wanted to know what to do. So they wanted to know where to start. And they were very much because what does it actually mean to get there and putting those pieces together. So the net zero investor framework set out and has set out how to think about this from a strategic asset allocation, from a target setting, and also tackling some asset classes. We've got listed equity, corporate debt, real estate and sovereigns. And also then those stewardship objectives, giving you sort of parameters as to where to start. So in the stewardship, it's the net zero says about starting at 70% of your financed emissions. So it really helps for me focus on kind of what are the key companies I need to sort of engage with and what are the sort of policy objectives there. And I think that's been helpful. Obviously then alongside that having Climate Action 100 plus and then sort of seeing that actually a lot of this is already underway. So I think that was one of the reassuring things to the challenge was actually when you start looking at those frameworks that actually we were doing quite a lot of the different bits, but what it's done is enabled us to kind of pull it all together. And I think that one of the big challenges is all of those asset classes. We all know that we started and our targets are set at around listed equity. We have a 7% per annum reduction in our carbon intensity listed equity, which is all around that sort of trajectory on that no overshoot. It's sort of a generally accepted kind of target to have, but that's for listed equity. It is difficult to set these targets in other areas. The Net Zero Investor Framework is going to be developing asset classes around private equity for infrastructure, provide guidance on how to deal with issues in derivatives and offsets. So some of the more tricky stuff, as it were, that we're going forward with. So just to know that there is more to come in terms of those areas. One of the challenges for myself as an asset owner is I have to do all of this work through a third party. And I have a whole host of asset managers, all of who are developing their own approaches. And also a lot of asset managers who I have to sort of persuade, if you like, to take this and to implement it, which is really why it's so important to have things like the net zero asset managers, because so essentially that's the alignment. We're on the same journey, we're making some of the same commitments. So encouraging all of our managers to kind of go on that pathway with us. We set out in our policy and made it really very clear to our asset managers that if we didn't feel that they were going to be going on this journey with us, they weren't for us. And essentially this would be a core component of whether they were retained. So we set out a very, very clear kind of red line in terms of their working with us. Equally, going back to that collaboration, we said we will work in partnership with you. And we've worked over the last 18 months and will continue to do so with each of our asset managers exploring new areas. One of the areas we're most excited about was some of the climate work in multi-asset credit, because we thought this is an area that perhaps we wouldn't make any progress with. We went out to tender, we asked a huge amount of questions around kind of not only what they were already doing, but what were their plans. And we're really there was still quite a limited response, it'd be fair to say, in the market, but there was enough of us to be able to select some managers who have committed to go on this journey with us and to work out how to do it step by step, starting off in things like corporate bonds, but then working out how they might do this in sort of asset-backed and some of the truly quite complicated areas as to how do you actually evaluate it? Because one of the challenges we know is data. We'll come back to this again and again and again about information flows. But it's working in partnership with those managers and having that, we're going to go along this sort of path together and to try and solve it and to get to net zero. But having alliances like GFANZ, having the net zero asset managers alongside the Paris-aligned asset owner commitment means that we know we've set ourselves a common objective that we're all working towards together over the same timelines, and that's incredibly important.
Okay, so continued theme of partnership and collaboration. So we're going to head to South America now, and Fabio, we've heard in the opening statement that over half of the global assets under management have supported the more ambitious government action through policy as set out in the Global Investor Statement to governments on the climate crisis. So from your point of view, why do we need policy as a core part of investor action plans? And specifically, what policies and actions are needed from your perspective from the Brazilian government?
Well, first of all, thank you very much for the question, and thank you very much for the invitation. I'm very honored to be here. So good morning, good afternoon, and good evening for all. Well, I think that talking about Brazil, the fact that we have the largest tropical forest in the world, the greatest biodiversity in the world, and a clean energy matrix has given Brazilians the feeling that we are part of the solution and not part of the problem. But it's the other way around. Brazil is the fourth largest responsible for the climate change, and the government is not contributing to the agenda. Our goals, our targets, the NDCs are very shy. We don't fight the deforestation, and in Brazil, unfortunately, we still differentiate legal forestation from illegal deforestation, which is absurd. So any deforestation must be stopped immediately. But actually, it's not only government faults. We have to think about our role in fighting the climate crisis. So I'll ask, how many companies in Brazil has set a target based on science? Only around 20. We have 400 companies listed in Brazil, thousands of large corporations in Brazil, but only around 20 companies have set a science-based target. How many Brazilian asset managers are signatories of the net zero asset managers? Only two, ourselves and another asset manager called JGP, no one else. How many Brazilian asset managers signed the Global Investor Statement for the climate crisis? Unfortunately, I don't remember anyone besides us. So there's no commitment from the financial community in Brazil. We have to stop only fighting against the government and to commit ourselves to a very important cause. So we have to stop only talking about the climate change and start acting about it. I see very few commitments coming from investors and coming from the corporations. We need a cooperation between governments, the social society, companies, and investors. Otherwise, we are not going to get any result.
Thanks, Fabio. So coming back to you, Betty, in the months ahead of this much and long-awaited COP, we saw net zero investor pledges and calls to action continuing to increase and becoming more mainstream. And with these pledges come the need to, of course, translate them into action. So operationalising climate targets can be challenging for all investors, but wherever the investor is on the journey, they need to make an action plan. So this year, the Investor Agenda developed the ICAPs, Investor Climate Action Plans, expectation ladder, and it was set up exclusively or inclusively to enable all investors to benchmark their progress. Upon making the net zero commitment, what's been the process of operationalising climate targets for CalPERS, and what does CalPERS Climate Action Plan entail, both in the short term but also over the longer term? I know there's a lot in that question.
No, there's a lot, but there's also been a whirlwind of activity as well. So I'm going to try my best to walk through it. And I'll also talk a little bit about CalSTRS, a little slightly different strategy. So CalPERS, we have 3 sustainable investment channels that really align with the ICAP focus areas: advocacy, engagement, and integration, which includes obviously investment. And so the following are really the actions that we believe are aligned with the essential elements of an ICAP, even though we really are reflecting them in our TCFD report. So in the focus area of investment, CalPERS has more than $20 billion invested in low carbon solutions and green investments. $12.1 billion, or approximately 18% of our combined private assets, that's real assets and private equity, is invested in climate solutions, renewable energy, sustainably certified buildings, and that was as of December of 2018. The figure continued to increase, but the exact numbers will be recalculated next year. We have $426 million invested in green bonds for fixed income, about $7 billion plus invested in low carbon transition solutions in public equities based on MSCI's low carbon transition solutions subcategory assessment methodology. CalPERS has also more recently changed the public equity composition from 10,000 plus companies to around 5,000, and we expect that this will slightly decrease our carbon footprint, but the exact numbers won't be released until next year. In the focus area of corporate engagement, CalPERS was convened and co-founded Climate Action 100 Plus, which now stands at 615 investors, $60 trillion of assets under management, 167 companies being the focus. CalPERS is engaging 20 companies through Climate Action 100 Plus, co-leading on the CA 100 Plus engagement with ExxonMobil. Significant engagement with Exxon investors in engine number 1, helped elect 3 of the 4 dissident nominees in a proxy fight earlier this year. That was well covered. CalPERS' focus has been on decreasing real-world emissions, and the Bloomberg New Energy Finance assessed the progress of the 167 Climate Action 100 plus companies. And as of August 2021, 111 of the 167 companies have set net zero or equivalent targets. So we see just a lot of progress on each of these fronts. Policy advocacy, another important pillar of the ICAP. CalPERS and the CA 100 Plus steering committees are leading the expansion of the Climate Action 100 Plus benchmark to include indicators on the just transition, climate accounting, and lobbying. CalPERS is a signatory of the investor agenda focused on companies to take on countries to take action, and we co-authored the just released Council of Inclusive Capitalism Just Energy Transition Framework to help provide additional focus on the just transition. We've provided comment letters to our regulatory bodies and have had recent conversations with SEC staff on climate risk reporting standards. Also advocating for the following aspects going into COP26, and we'll continue to focus on global standards for climate risk reporting, misaligned incentives through fossil fuel subsidies that are holding up the transition to net zero, and also the advocacy for pushing for a meaningful price on carbon. And then the last pillar of the ICAP, investor disclosure, CalPERS and Climate Action 100 Plus steering committee are helping lead the expansion of the benchmark, which will help assess the 1.5 degree Celsius scenarios of companies and allow for investors to better assess their own portfolios. And this has been limited to 2 degrees Celsius in the past. We've disclosed 2 recent reports, CalPERS, what we call the SB 964 legislative mandated report on climate-related risk, and the CalPERS TCFD report. Our next TCFD report will be published in 2022. And then something very exciting, CalPERS and Carlyle have created the ESG Data Convergence Project, which is backed by more than $4 trillion in assets under management. And this is brand new, so the impact of the project, such as carbon footprinting of private equity, will be felt more so a year plus from now and going forward. But the project has identified 6 metrics to standardize reporting on environmental, social, and corporate governance performance of private equity portfolio companies. More than 200 LPs and GPs have expressed support and desire to sign up, and this will completely, I believe, revolutionize GP tracking data and LPs' access to ESG data. The metrics will cover scopes 1 and 2 greenhouse gas emissions, renewable energy, board diversity, work-related injuries, net new hires, and employee engagement. And I just want to pivot a little bit with respect to CalSTRS. This was a recent action in September. The CalSTRS board committed to a net zero investment portfolio by 2050 or sooner, which is the natural progression of our long work on climate engagements with public companies. And as stated in our investment beliefs, we know that our investment risks are associated with climate change and the related economic transition materially impact the value of our investment portfolio and our ability to provide the retirement benefits earned by our close to 1 million members. Over the past 2 years, we analyzed the climate change impacts to both the financial and physical risks to our portfolio, which led to our board adopting a net zero pledge last month. 2 months ago. Work has already begun on the CalSTRS Net Zero Action Plan, which is based on clear internal governance, appropriate methodologies and frameworks, and portfolio emissions measurement. But most importantly, the plan will include interim milestones for managing emissions-related risks and a pledge to publish regular reports of our net zero investments, what I consider are really an accountability element that hopefully can even accelerate getting to net zero before 2050. CalSTRS plans to build on the work we have done, including investments in low carbon transition readiness ETFs, and CalSTRS is also focused on the private market investments in affordable housing, zero carbon energy solutions, resource efficiency, and agriculture management. So we all continue our successful public company engagements. This is a piece that needs to continue. We also joined in the transition of the ExxonMobil board to bring in more climate sensitive board members. And our sustainable investment and stewardship strategies has traditionally managed a broad public equity investment portfolio focused on strong governance practices, ESG-focused investments, and a low-carbon index. And today, these investments have an AUM of approximately $8 billion and growing. So we see this new portfolio, when combined with the existing, our main portfolio, really hitting targets of about 5% of total fund in terms of being able to reach across our private asset classes as well. So a lot of activity leading up to COP26, and most recently, CalSTRS has undertaken the PRI-led collaboration with asset owners and asset managers. The conversations are focused on supply chain issues as they relate to deforestation and sustainable commodities, among other items, and how to mitigate exposure in developing goals and engagement plans. And the goal of these discussions is to integrate these issues into their current stewardship. So transparency, metrics, both will be crucial for adequately measuring the impact of nature-based climate solutions as well, which will require effective reporting and regulations. This is kind of whirlwind progress report, Fiona, but I think really important just to show the differing strategies, but also that the 4 focus areas of the ICAP are really being met.
Yeah, thanks, Betty. It just shows the amount of work that does need to go into this transition, but engagement, voting, investing in solutions, thinking across asset classes. There's the energy transition, but also then thinking about biodiversity issues as well. And I was really pleased to hear you talking about the just transition, something that a few years ago I don't think we discussed enough, but now has been a core part of many of the discussions that I've been involved in while I've been at COP. So Fabio, I want to come back to you. You were saying that, there's just not that many organisations within Brazil that, have joined things like the asset owners group, the investment managers group that are committing to net zero. But since Fama was founded, ethical and corporate responsibility has really been in your firm's DNA. So as as the only member of from Latin America of the Net Zero Asset Managers Initiative, could you talk to us then about why you decided, from your organisation's point of view, to take the critical step to commit to net zero, and why this is important for others in emerging markets, and how we might get more on board?
Thank you very much for the question, Fiona. So let's talk about ethics. Actually, I think that we should stop calling the climate crisis as an environmental problem. It's much more than that. It's a serious, very serious social problem, reflecting in hunger, poverty, inequality, millions of refugees, and many other effects. So if we think about the climate crisis, it's something related to ethics. And we don't have the right to steal the future from the next generations. So it's all about ethics. So since I founded my company back in 1993, we have been focusing on ethics. And the climate change is all about ethics. So we take it very seriously, and we have been making a lot of commitments. And everyone in the world, which is aligned to ethical standards, should be making commitments to the climate change. It's all about ethics.
Well said. So, Hido, some investors are obviously just starting to take their first steps on climate. Some have been doing this for, a lot longer than others. But we have to start somewhere. You've got to start at the beginning, and you have to think about your formal position on integrating climate positions into your investment strategy and decision making. Other investors may be looking to make the next step by moving to fulfil climate commitments through strategic decision making, detailed planning, regular engagement and data collection on progress, and obviously the all-important transparent disclosure. So what was the process that Dai-Ichi Life went through to make its net zero pledge? I think that's important for others who haven't yet done that. Often they want to understand from others, what process did you go through? How did you get there? What are some of the lessons that you learned along the way, or what messages would you give to other investors who haven't made this commitment yet about getting started?
Okay, thank you for the question. That's a very good question. From our experience, Dai-Ichi Life's experience, I think it generally takes 5 steps to reach to set the decarbonization target of your portfolio. So I would like to describe very briefly from a very practical perspective here. First of the 5 steps, as a starting point, you need to be brave to make a commitment to net zero. It might be a little bit counterintuitive for some of you that commitment comes first. Especially in the context of Asia, where the sometimes top-down approach does not fit well. But however, since the initiative toward net zero is basically a top-down in its nature, so it is very important to consider things by backcasting rather than forecasting. The second, measure the carbon footprint. But here is one technical challenge. This will be a combination of third-party data vendor like S&P, MSCI, or Moody's, or among others, and your own estimation. Estimating the carbon footprint can be a big challenge, but some global initiatives like PCAF, Partnership for Carbon Accounting Financial, can help you and provide guidance and methodologies for this estimation. In the case of Dai-Ichi, we are basically utilizing the third-party data vendor. And third, once you have a good picture of your carbon footprint, you'd like to analyze your portfolio. For example, in Dai-Ichi's case, we realized that about 2/3 of our carbon emission comes from the top 50 companies. So we can now prioritize our efforts towards those companies. And also, forward-looking view is a key for this analysis. Before you set a strategy, you'd like to have a good sense on how each investee company will make transitions and reduce emissions into the future, and also what your portfolio will look like into the future. The next is to set a strategy. Here, engagement with the investee companies should be the priority, rather than just divesting from your portfolio. Divestment alone does not really solve the problem. Dai-Ichi is also putting the priority on the engagement, especially for the aforementioned the top 50 priority companies. Last but not least, set a target. Here, again, you need to be bold. Of course, you'd like to have some level of confidence before, so that you can, the confidence that you will be able to achieve the target. But you have to be ambitious and decisive with a strong commitment from the top management. So in summary, there will be some technical challenges, but the point is you need a strong commitment from your entire organization and also from your top management. And you need to be ambitious to change the world toward net zero. Yeah.
Thank you. So you need to be bold, brave and ambitious.
Yeah.
So Faith, we'll come to you. As the other panellists have shared, investors need credible public policy to provide the signals and to provide the incentives that direct the flow of capital across the global economy, and also need a whole of government, whole of economy, whole of finance transformation towards carbon neutrality. How have you been working with others, with clients, to educate them and really building your portfolio to deal with systemic risk?
Yeah, thank you, Fiona. I think I'll touch on it. It almost draws together, I think, some of the points that have been made by some of the other panellists. So we do a lot of climate workshops, so the opportunity to work with the clients has been phenomenal. There's been a huge appetite, so I think there's no barrier there. And we use tools like the Sustainable Development Goals sometimes as a framing. So even though that we may be invited to talk more about perhaps climate, trying to contextualise that actually it's a challenge. And as we've talked about, it's about perhaps linking to some of the other priorities that Brunel has, some of the more obvious ones around biodiversity, gender, even tax fairness, and some of the perhaps some of the misalignment of tax incentives and how that's aggravating perhaps some of the other objectives. And even cyber, we have a theme on cyber, but we've got false news, but also how can you turn the power of cyber into a positive force. I think from a UK perspective, the focus on systemic risk has been really enhanced by the FRC Stewardship Code, because it requires any asset owner, any pension fund to actually be aware of their systemic risk and how they're actually integrating that into their pension fund and their strategic asset allocation and portfolio design. So that's sometimes that can sound a bit negative, but also the SDGs as a framing also is quite a stimulus for the positive. How can you get the capital flows into the solutions, not just in tackling or dealing with the risk side of it? And there's huge appetite for that, I think, across whole areas. And one of the things one of our clients was part of the 130 billion that was announced as part of the Paris-aligned initiative in terms of that climate solution pledge from Nordic and UK investors, which covered everything from nature-based solutions, energy efficiency, renewables, a whole raft of different opportunity set that we have to invest in. So I think always trying to turn it more to the positives and how we can actually allocate those flows. The other area of education, so there's this interconnectedness at a macro level with themes, but also really working with the clients to understand the interconnectedness in a sector-specific way. And this is something that Climate Action 100 Plus has been particularly important and is really championing, is understanding the whole value chain, because we're still under a lot of pressure around the divestment, around the fossil fuels, and trying to explain that it's not going to be straightforward just to exit those. It's not actually going to help solve the problem. We need to look at this as a whole value chain type proposition, and seeing those transition plans and the work that needs to happen across that, and using our stewardship power to work with these business leaders, to work with each other, say across sectors, to really bring about some of the changes. And I think that's really important, because we have got concerns that there could be some unintended consequences. We're making people very aware, we're providing them with lots of data on areas, but we need that not to, we need to still make it for real world. I think there's going to be a real temptation, and something we've got to be really quite forceful as an investor community to resist, is making net zero portfolios, not net zero world. And I think this is such an important issue, and we're going to have to galvanise and support each other, because sometimes there is going to be some messy, bumpy stuff along the way that's not going to be easy for us to communicate. So working together, working collaboratively, and making sure that we essentially cover each other's backs, really, as an investor community, because it is going to be difficult. We've talked, to go back to your point at the beginning, it's going to be challenging, but we need to work together to overcome that and communicate really effectively.
So just on that, Faith, while we've been here at COP26, there's been lots of protesters outside. There's been lots of accusations about greenwashing, although we all know that we've done a lot of work in these areas. So how do you think that as investors we can adequately, and coming back to what you were just talking about, respond to some of these questions and respond to concerns around greenwashing, that we're not doing enough?
Certainly the transparency agenda. So, I mean, absolutely, we were one of the first things we did when Brunel formed was sign up to the Task Force for Climate Disclosure, and obviously we will do the same around the nature-based one. So I think that disclosure transparency agenda, and very supportive of the transition plans, that requirement, and again a UK announcement that came out on the Finance Day to have the companies and investors actually set out what their plans of action are and how they're going to deliver that, and be very transparent. So very much communication. I actually engaged with some of the protesters, partly because I asked if I could take a photograph, because they were talking about sort of the code red for humanity, and they said, oh, was I a journalist? And I explained I was a pension investor, and they went, oh, like this, have you divested? And I said no, and they said why? So I tried to explain that it wasn't, you know, how my theory of change, and that we had the same objective, but we had a different way of getting there, and some of the sort of the complexity behind that. So I think engaging. I think one of the things they said, but my pension fund doesn't tell me how they're voting. My pension fund won't tell me what we're invested in. And I said, well, we do. We are transparent. You can find out all of our holdings, all our voting records. We have to build trust. I think that's the thing, build trust, and trust. I think trust is based on the transparency, but it's not going to be easy. Not going to be easy at all. But
yeah,
we need to keep moving forward.
Okay, thank you. So build trust. We need to collaborate. There's obviously a lot happening, but there's still a lot to do. But I think that we can see from what the panel has talked about, from the work that all of the organisations are doing, that there's an incredible amount of work that goes into trying to work across your portfolio, across asset classes, increase stewardship, increase voting activity. The investment community is doing a lot, but there's a lot more to be done. And it is really important that we work together, share knowledge, share experience, learn together. And as you said, Faith, there will be bumps in the road. And how do we support each other, and how do we have each other's back? So I want to thank our fantastic panel from around the world today. So Betty Yee in the United States, Deanne Stewart in Australia, Fabio, who's in Brazil, Faith, who's here in the UK, Hido, who's here in the UK, but representing Asian investors today. And thank you all very much for your time and for your comments. And I'm going to hand back to Rebecca.
Thanks very much, Fiona, and thanks everyone. Fascinating to hear all your insights, and it's incredibly encouraging, and this is the momentum we need to keep up, and we need to continue to share this information between the investment community. So with that, I would like to just make a small change to the agenda, and just to double check, it was a bit of a last minute change. You're not seeing things. I'm very pleased to introduce that we have, to close us out today, we have Paul Dickinson, not Paul Simpson, so another Paul. Paul Dickinson, who I'm sure many of you will be familiar, is the founder and chair of CDP. So thanks so much, Paul, for joining us today, and for your final comments on this very important investor agenda session at COP26.
Well, thank you very much, Rebecca. Thank you, Fiona. Thanks the whole panel. Such a pleasure to be with you. An honour to serve at this, the delivery COP, which is what everyone has been talking about. That, you know, we're almost at a point where the private sector is ahead of governments. But I'd just like to speak a little bit about the investor initiatives. You know, we're part of a growing movement. The investor agenda is provided the foundation for GFANZ, and we are, as pretty much all the panelists have said, encouraging all investors to develop investor climate action plans covering, well, helping investors take action where they are and covering critical areas for investments, moving from just measuring the portfolio through to actually advocating for aligning policies with 1.5 degrees, for corporate engagement, moving from just supporting engagement all the way through to actually encouraging 1.5 degree strategies, which are critical, for investor disclosure, from formal statements and challenges through to disclosing net zero targets, and then critically, and this is the one I want to really emphasize, for policy, you know, from supporting collective statements which support Paris, which are important, through to calling on governments to actually make policy at this time. And introducing carbon pricing, regulations and standards, or as the UN Global Compact call it, legislation and fiscal frameworks for a price on carbon. This really speaks to Stephanie's point about the 733 investors with 52 trillion making statements to governments to step up, talking about 2030 targets, net zero plans for sectors, phasing out fossil fuel subsidies, an end to coal, mandating disclosure. And it's really important that we all at this time help governments, because I think I just really want to emphasize with the kind of emissions reductions we're looking for, quite a few % a year, every year from now on, we're going to need to price in greenhouse gas emissions. But when we do fully price in that externality, then that 130 trillion in GFANs is going to be kind of suddenly operationalized, and that's incredibly exciting. And that money will kind of move, I think, as a tsunami into the new technologies that we need. And I just want to talk for a moment about how successful we've actually been as communities of non-state actors, as the UN would call them. We've had collaborations. I'm going to draw out one, which is the Science-Based Targets Initiative, where you've got more than 2,000 companies committing to setting science-based emissions reduction targets. And I think that the point I really wanted to make is that it's a moment now where we've sort of provided government with an enabling framework. And the public are there too. I'm sorry to remind us of this awful news, but people have been drowned in their basements in rain in New York. They've been drowned in their subway trains in China. They've been, houses have been burning from California to Australia. I think we can come together around the idea of science-based policy. And I think, why would investors support science-based policy? Well, I want to draw attention to Aware Super with their 1 million members. Isn't that incredible that they're engaging now with the federal, with the state governments, with the regulators? And they're looking as far forward as 2070. But it was also wonderful to hear from Betty, and I've certainly asked a trustee of CalPERS once what was their investment horizon, and they said in perpetuity. There's no end date for the state of California. And when investors start to think as universal owners, thinking about the whole economy as well as their investment portfolio, or recognizing that the economy and the investment portfolio are the same thing, then we can start to see that real action can be taken. I think Roger Irwin has defined a universal owner as somebody who's prepared to engage to change the system. So to conclude on that, I want to draw particular attention to Fiona's excellent comments about how we need to operationalize these actions in strategy now. Faith talking about linking to her members to kind of build trust and to open a dialogue that allows fiduciaries to move forward with real confidence. And once again, Betty's extraordinary work on engagement with CA 100+, looking at corporate lobbying, which I think we all recognize is a significant problem, but then also having fantastic victories like the engagement with Exxon, where engine number 1 put forward a very reasoned analysis and actually got 3 new directors on the board of Exxon. Final comment I want to pick out for today was Fiona's very appropriate and I think super relevant comment about a just transition, because I think there is going to need to be some kind of settlement between the people and governments and industry to get us the regulations that we need to solve this problem. But I just want to finish on this very optimistic note, and for us to recognize just how much we've achieved together in the last 10 years and how ambitious we can be. There was a phrase coming into the Paris Agreement, we can, we must, we will. That's what the Secretariat campaigned on. But I think here, together, there's a mountain to climb, but together we actually are getting it done. And just to say, I salute the achievements of all the participants in this great collective collaboration, and thank you very much for what we're going to do together. The union makes the force. Thank you.
Thanks, Paul. Thanks, everybody.